Welcome everyone. We're here at the offices of RI Financial Services with our good friends Russell Ingledew and Brian Spencer to discuss some of the more pressing issues regarding the tax season. So gentlemen, unfortunately we're seeing a lot of short sales right now, and the good folks that are watching pretty much know what a short sale is because I'm sure they've been advised by their realtor or real estate professional what a short sale is. But really, what are the tax implications of a short sale? The most common questions perhaps you do field on a day-to-day basis so that our folks are aware of it.
Well, a short sale generates cancellation of debt, which has tax implications. If it is your personal residence and the debt that is canceled is what we call qualified debt, there will be no income tax paid on that cancellation.
Okay. So we can discuss a little bit what a qualified debt is. Basically, it's purchase indebtedness, isn't it? When you do purchase.
Correct.
So, let's say in 2005 you bought a home for $500,000. That's the qualified debt. If you refinance later at $750,000, still $500,000 is the qualified debt. So let's discuss in that situation that there's a short sale and there's perhaps a shortage of $150,000 under that scenario.
Right. That $150,000 is going to be income.
Okay.
And you will pay tax on that.
You will pay tax on that? Yeah. Are there any circumstances where they won't pay tax on an amount of that nature?
Yes, there is. Two scenarios. One would be bankruptcy. Okay, where all the debt is written off. Or two, if the taxpayer is insolvent. Insolvent meaning that your liabilities exceed your assets, and by that difference. So if the difference exceeds the amount of the debt cancellation, none of it will be taxed. If it only covers half of it, then half of it would be taxed.
Okay, so you have several options there. Insolvency, if you can show that the property was insolvent, or the other extreme is bankruptcy.
Okay, it's beyond just the property, it's the whole, all the assets and the liabilities of the taxpayer.
Exactly.
Yeah.
Fantastic. I'm glad you corrected that because it is something that is not well known. I'm glad, Russell, you're informing everyone that's watching. Now let's go into the other aspect that we're seeing quite a bit is foreclosures. Obviously there's a difference there between short sales, but if you would, on the thoughts from before, for foreclosures, what are you seeing regarding the tax implications there?
Well, we have pretty much the same implications. Okay. You know, in a foreclosure, basically they're taking the property back, they develop a fair market value or turn around and resell it. The difference between what they would get for the sale of the home versus the amount of debt that's outstanding, any difference is going to be cancellation of debt. Okay? And once again, if it was your personal residence and it was all qualified, there would be no tax. Okay, so we're back into the same scenario.
Right. Now, what folks really don't realize is that there's primary residence, and if you have second home or investment property, do the same rules apply?
The answer is no. Okay, this personal residence is very strict. It would be the same rules that you would follow if you excluded the gain when you sold your residence by living there for 2 out of the last 5 years. Okay, so for second homes, rental properties, cancellation of debt, unless you're in bankruptcy or insolvency, is going to be 100% ordinary income.
Okay, great. Fantastic information. Now finally, we're looking at a lot of modifications in this environment also. Let's discuss that a little bit regarding tax implications, what kind of questions you're receiving regarding modifications.
Okay, well, you kind of come up with the same scenario with a modification. That debt that's canceled by the lender, once again, if it's a residence, can be non-taxable, but however, since you're still holding the property, the amount of cancellation will reduce the basis in your property. So when you go to sell it, that cancellation will come into play at that point in time.
Okay. So definitely these gentlemen, you need to come see them regarding those three aspects that are occurring right now. If you have any questions whatsoever, I'm sure they'll be happy to answer them for you. So folks, hope you had a pen and pad available because a lot of great information from Russell and Brian. They're more than happy to answer any questions you might have for them So feel free to reach them at the number below or email them, and again, they'll get back to you promptly. These are true professionals that you should be discussing with regarding your taxes and overall financial health. I'm Steve Mansell. It's been a pleasure bringing this to you. Take care.
Thank you, Steve.
Thank you.